Good morning, everyone. How's it going? It is 6 a.m., half an hour before the market opens on Monday, August 19th. Now, last week we had a bounce and a surge back upwards in all of our major indices, but we ended with a lot less momentum and tapering off very near some key resistance. So let's take a look and see how we feel about that, see if we think there's enough momentum in this market to continue and go above. And if it does, then we'll start to challenge some new highs in the markets. So here we can see that after we came to the MA50 on Wednesday, we gapped up and surged higher on Thursday with some decent volume. But then Friday was a little quiet. We didn't get a huge amount of volume. And we just moved a tiny bit higher, very close to this 555 level that we've been watching. That's the last kind of critical point before we can say that, okay, we'll challenge new highs and potentially continue to move upwards. So what are the chances of us just continuing straight up? Well, it's done it so far. So this has been very much a V-shape recovery off of this correction. But can it continue up to here? It'd be very unlikely for it to do that. If we are going to continue with strength, a more normal path would be for it to just pause right here and consolidate or pull back to that MA50 before it got enough juice to keep on moving upwards. So a pause where we are is very likely, and I can say that Friday is the beginning of that pause. So we'll see. Today's market and how we trade today will be very telling, which is why I want to wait until the end of the day before I make any directional decisions. For it to come back down through all of this resistance is kind of tough. Just like the whole time we were saying it's kind of tough for it to go straight through it. Well, it did go straight through it. When for it to come straight through it back again, that's going to be kind of tough. At some point, it's going to get caught somewhere. We can't keep making these huge moves without some sort of consolidation. So my expectation really is until we get more stimulus, we will probably chop, and that stimulus, the strongest stimulus coming up is the Fed rate decision on September 18th over here. So it's possible that we chop sideways until then. And it's possible that we chop in a fairly large range because there is still some news that is going to come up that is going to push the market's opinion of whether or not that rate cut happens or how much of a rate cut, I should say. Basically, the opinion is that it's 100%, but is it going to be 25 or 50 basis points? My opinion is still 0 basis points. That's no rate cut, but we'll see. Obviously, my opinion is the unpopular one because the market isn't even pricing in the possibility of that. They have that at 0%. So what I want to see here is volatility. Are we still above 15? I think on Friday we dipped below 15, and I want to see if we stay below 15. So let's take a quick look at our VIX. And we're opening at 15.47. So that's interesting that we floated back up. On Friday, we did get down to 14.81. So now that looks like that we're floating back up, that's showing some uncertainty at this resistance level that we have right now. Let's take a look at our futures, then we can look at the broad market. Okay, flat. It's barely up a little bit. It's mostly random amounts. All three of these below 0.1%. Yeah, all of those. So 0.08, so 8 or 9 basis points. That's very, very random, especially after that huge amount of movement that we saw all last week. We were seeing on some days 1 or 2% over the last 2 weeks, I should say. So 8 basis points is really nothing. So it does look like this is going to be a wait and see type of Monday. And we really want it, or perhaps a rotational Monday. So where we rebalance our sectors and kind of chop sideways and we evaluate very carefully how this market is going to proceed for the rest of the week. Let's take a look at our news, see what kind of economic news we have coming out. So today, nothing. Tomorrow, nothing. Wednesday, FOMC minutes. So that could cause some volatility if we start to hear some things being discussed in the FOMC that this market's not comfortable with, especially talking about not cutting rates, needing to see more data, even though that's literally what Powell said. That's not what got priced into the market. That's not what apparently everyone interpreted, because all of the press that you see said, oh, Powell hinted at rate cuts. He was telling us that we're getting rate cuts, which is not my interpretation of what he said at all, but that's the media and the market has interpreted that. So let's take a look at our Fed Watch tool, see how these percentages have shifted. 70, okay, so the market really pulled back from the 50 basis point prediction, because we were at over here, we can see that we were, well, I guess you can't see it. At sometime last week, we were over 50% here. We were almost 60%, I think, on a 50% or 50 basis point rate cut. So that has dramatically shifted this way. So there's less enthusiasm for a 50 basis point rate cut, and 50 basis point at this point is completely unreasonable. The Fed moves in 25 basis point increments. It is rare to see a 50-point increment, and the 50-point increment, it would be because there's something extreme going on. There's nothing like that happening right now in the markets. It's a normal market. It's just we had a consolidation, or not a consolidation. We had a what am I think? Why can't I think of the word? We pulled back about 10% and then we bounced. That's it. And then we had a V-shaped bounce. It moved very quickly. So there's nothing to be concerned with inside of the market. The jobless claims are steady. Our inflation, evidently, based on the numbers that are being reported, are slightly down from a year ago. So it looks like inflation is quote unquote under control. If we take a deeper look into it, we can see that basically the major reason why inflation looks the same or slightly down from a year ago is really just because of used cars prices and some from new car prices. And that's not a purchase that people make every month or even every year. So that is not going to actually have a huge impact on most people's spending. So inflation is actually still in play. That's one of the reasons why I also believe that the Fed is not going to cut in September. And people are just looking at the headline number. They're not digging down and looking at the numbers. So if we start to continue to get this type of movement in the expectations of rate cuts, and this starts to hit more, this gets to get smaller and smaller, and especially if we start to get a number in the zero rate cut as well, then we'll start to see this market pull back down again, and then maybe consolidate and get confused into that September meeting. VIX will stay elevated above that 15 level, and we'll just be in this wide chopping range. That's what I'm looking at right now. That's what I'm expecting. So today, if we break through that 555 level, then we'll reevaluate and see, because once we break through that, then what could happen is we could make an all-time high, another all-time high, before pulling back again, and then maybe chopping sideways into that Fed meeting. But for now, I'm expecting this to hold, but I'm not going to trade based on it. I'm just going to wait and see if it actually does hold. So today's mostly going to be a observing day. I wouldn't really want to be putting on new positions today. There may be one or two sectors where I might be comfortable with new positions, but right now, if I'm going to go long, it would certainly be in a defensive sector. It wouldn't be speculative. It wouldn't be SMH. It wouldn't be QQQ. See, SMH is still below that MA50. QQQ, I think, is right at the 50. XLY had right at the 50. And we have a lot of earnings this week, if I remember. This week. That are, yeah, so Lowe's is retail related. TJX is retail related. We have a couple of tech related stuff. So this is going to be Target, Ross Stores. So a lot of Estee Lauder, a lot of retail and a little bit of leftover tech is happening this week. So that is basically QQQ. And some of these stocks, even though they're not huge market cap, they are watched very carefully because they're influential and they help, they're kind of bellwether type of stocks to see how that whole sector is going. For example, Lowe's and TJ Maxx are bellwether. Ross Stores together with TJ Maxx are bellwether. Target is heavily followed to see how the consumer is doing. So we do have quite a few catalysts by themselves, nothing super major, nothing that would completely change the direction of the markets. But if they start to together tell a story, especially all of these tell a story about the QQQ, then that could really start to influence the movement. So I'm going to be watching QQQ more carefully than the S&P 500 this week because of all of those earnings that are coming out, because it is more sensitive to interest rates, and we are at key levels, and we do still have one resistance point above us before we can really call this bullish, or not call it bullish, but be comfortable being bullish in the QQQ type stocks. So we're going to be watching those sectors very carefully, especially today, and also that VIX, or we could say the VXN, sorry. Volatility on the NASDAQ. You can see it's still quite elevated from where the base was for 2024. So those are the things that we'll be watching. I should take a quick look at bonds before we wrap up. The bonds looks like they're going sideways. This is kind of messy. Let's look at the US 10-year. That might clean it up a little bit. Not yield, price. Yeah. So this is less choppy. You can see that we came down hard, and then this is really just chopping sideways. It's harder to see that in the TLT just because of all the volatility that we've had in there. So this is really just chopping sideways. This is in a wait and see mode. It's probably not going to move much before we get those FOMC minutes either. And we didn't finish out this. So let's see. Jackson Hole. Okay. Jackson Hole is happening this week. That's going to be big once that concludes and Powell speaks. This is going to be followed by the markets for sure. So whatever Powell has to say after that Jackson Hole meeting is going to be potentially market moving. And it's happening on a Friday, so which is kind of interesting. Normally, we would get things like that more in the middle of the week, so we have time to react in the markets. So Friday is going to be interesting. It might be more volatile than normal. So we want to be very careful this week because there are so many things that could push us one way or the other, and especially if they're antagonistic to each other, we might just get chopped around. And so it's going to be hard to pick trades that depend on a direction for a extended period of time. It might be okay for 1 or 2 days, but for 1 or 2 or 3 weeks, it'll be tough because any one of these could just flip on your position, and what was very profitable could just suddenly become unprofitable. So what we want to see is, excuse me, if we get that volatility, we want to see a lot of directional movement with it. If we just get expanded volatility, then that's just going to increase randomness and going to make it very difficult for us to trade. So we'll want to watch for volatility and directional movement. And just based on what we're seeing, the fact that we're at heavy resistance levels right now, the directional movement is a little bit more likely to be to the downside. So we'll watch that very carefully. If we keep moving upwards, then you could call that strong upward directional movement from continuing from 2 weeks ago. But we just want to watch and make sure that it is actually doing that, because we did slow down on Friday and we did get lower volume, at least on the SPY. We got lower volume on Friday as well. So just be careful. I would observe today, not really take any new positions. Okay. So that's going to be it for this morning. We'll see how today plays out, and I will see you in the post-market session.